watching Business Day Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as the trading strategies for the day today. Remember, Indian equity markets recorded their biggest single day gain in nearly 2 months as of yesterday, staging a strong comeback. The Nifty claiming 20 to 800, 20 to 850 on an intraday basis too. The Sensex also surpassing 75,300 odd mark. In fact, there was excellent upside breakout on both the benchmark indices as well. The Nifty finally ended the day about 326 points higher at 22,834. All the sectors posted gains with frontline indices up 1.5 to 2%, broader markets up 2%, and we've also seen a remarkable improvement across the board, across the sectors, to as many as 46, 47 stocks on the Nifty ended higher. Autos, financials, metals all contributing to the gains. Heavyweights like ICICI and HDFC Bank were the biggest contributors to the Nifty and the Nifty Bank yesterday. The big question now is, can the Nifty finally advance to 23,000 and beyond, breaking the three hurdles as well? So that is something that we'll try and find out. As of overnight, the cues that we have, US markets did see some hit after getting into the strong gains over the last two trading sessions. Tuesday night, we did see tech companies leading the decline, and as investors are anxiously awaiting the Federal Reserve's interest rate decision on Wednesday, there is bound to be some kind of a volatility that we saw play out last night. S&P 500 dropped by over 1%, Nasdaq fell by 1.7%, and this was largely led by the heavyweight tech stocks. Dow Jones also slipped by about 0.6% in trade this morning. Asian markets, however, did show some resilience, bucking the trend of declines on the Wall Street. So shares in Japan, South Korea also rose. Australian equities, however, did show a minor dip. But we've also seen, across the board, Kospi, Decay, Hang Seng up and about in trade. The GIFT Nifty also indicating about a 54 point of an uptick. The foreign investors' portfolio they also bought into Indian equity markets and they turned buyers after some 17 straight sessions where they were selling the Indian equities. 694 odd crore rupees is what we've actually seen from them. Of course, the domestic institutional investors also mopped up about 25-34 odd crore rupees. The 50, like I said, is pointing out to a higher start. We'll see how that shapes up. But let's welcome our guest on board. We have Mr. Gaurang Shah joining in, Senior Vice President, Geojit Financial Services. Warm welcome to you, Gaurang. Good to have you with us. Well, first up, tell us, we are nearly that 1,000 point up from the recent low that we had seen around 21,800, 21,900. Does it finally give you that confidence that this rally should be looking at a sustainable trend going forward?
Thank you, Sakshi, and morning to all of you also. To answer that question, I think I'll have to call up Mr. Donald Trump. He's the man at the spotlight, right? I mean, a kind of announcement and news flows that comes in from US as far as tariff is concerned. So that was on the lighter note, but we've come a long way, and in a very short span of time. I think it was last week that the recovery started. In a matter of, I think, about six odd trading sessions, we've gained almost about 900 plus points from sub 22,000 to currently where the market is likely to open up. The indication says that we might open up at 22,900 plus kind of levels. To decisively say that we have put the bottom in place, I think it's a little bit premature, Sakshi, primarily because of a couple of things. You have a whole host of central bank decision coming this week, like you were mentioning. The Fed will announce its decision. Then we'll have Bank of Japan and Bank of England announcing the decision on interest rates. We'll have some data points coming in from the rest of the world. At our end, we will have a curtain raiser from 10th of April onwards next month on the final quarter for this financial year. And before that, the love date that Trump has announced in form of 2nd April, reciprocal tariffs. We don't know what's going to happen. There are a lot of uncertainty as far as that part of the world and that kind of, complex situation in terms of tariff. He's announced something and he's gone back, not once, but twice. I think wisdom should prevail upon certain individuals in the Trump administration to advise President Trump that this may lead to a catastrophe as far as US economy is concerned. And already we are seeing some signs of that, right? So to say that bottom end is placed, I think it's a little bit premature. We may see some kind of selling coming in because of the kind of run up in just about 6 odd days that we've seen. Short term, medium term traders would come to book profits. And along with that, we have the FNO expiry next week, the final one, of course. So there will be a little bit of choppiness and volatility, but Sakshi, I've been maintaining a positive stance on the Indian equity market for a pretty
Yes.
long time. Even when we were down and out, when they were at 22,000, people were
Correct.
talking about 21,500 and 21,000, and some spoke even 20,800, right?
Yes.
So I remain optimistic in this kind of environment. When there is a lot of pessimism, I think the optimism gains momentum within me. So long term, there is good growth story still intact. We expect the fourth quarter to do well. And the good part is rupee is gaining strength and crude oil is down. So that's a double positive as far as our economy is concerned.
Yes, absolutely. A lot of factors, and rightly Gaurang did point out that even when there was a lot of pessimism, he continued to maintain that the markets will bounce back. We should not write down the bull story right yet, and that's something that we are seeing unfold. I hope that continues. 22,855 right now in the pre-open trade, so mildly higher in trade. Let's hope that this improves for the better going forward. Let's just bring in a few names to see how some of those names that were contributing big time yesterday, how are they performing. ICICI Bank, HDFC Bank, key contributors for the Nifty yesterday. Let's see whether it's a second day in a row that their participation is coming in. No, there's a 2% downtick as far as the pre-open trade at least is concerned on the ICICI Bank counter, 1280 right now. Some gains being given up. So HDFC Bank also down by about 0.3%. Let's look at Reliance Industries to see how that one is shaping up. Even though yesterday it was just absolutely flat, not contributing too much, 1240 even now. Flat with a positive bias. Let's also look at the IT names. Some kind of gains came back on the IT names yesterday. So let's see how that one is shaping up. TCS mildly down in trade at 3547. So flat absolutely on that front too. Infosys also about 0.5% down, but I think metals will also be important to track today for a separate news flow that we will be just coming to. But Gaurang, which are the pockets that are giving you, those bullish signs as of now? Since you said that, you had already penciled in some kind of optimism to return. Whether we have made a bottom or not, of course, is a big question. But slowly and gradually, we could be course correcting. And if that happens, then which are the pockets that give you the signs that, yes, go big on them now?
Well, Sakshi, so purely from a long-term point of view, again, I'm not in a
Yeah,
position to comment from a short to medium-term point of view. I
sure.
won't even dare to do that because that's not my forte. But my sense is on the earnings front, okay, since we are approaching the earnings season in the next about 2 or 3 weeks, I think banking and finance should do well. There should be some positive traction as far as cement is concerned. That is one space that not many people speak about, Sakshi, but that commodity space is likely to do well. We believe defense, cap goods engineering, power, and uh, possibly autos and IT. Though IT has been down and out because of the fears in terms of budgetary cuts, discretionary spends in the US, and the triple four T's, Trump trade tariff tantrums. That's what possibly, spooking the market, at least from a short to medium term point of view. But we believe that US does contribute to the balance sheet of IT companies based out of India. But it's not like US is the only place in the world that Indian IT companies do business. India minus US, there is a lot of opportunity for Indian IT companies to deliver. And this is just a short term blip. So I believe IT should also perform.
Okay, got that. So that IT should also perform. The metal space, Mr. Shah, is something that I wanted to discuss. All these shares of steel companies, JSW Steel, Tata Steel, SAIL, they will be in focus today because the DGTR has recommended imposition of safeguard duty on these non-alloy and alloy steel flat products. Now, this was something that was already being, anticipated, but this overnight notification of that provisional 12% safeguard duty, what does it mean for the metal counters? Do you think a lot of it was already priced in and that's why the metal story was already going well? Or do you think this has enough and more to carry on the momentum in this space, sir?
So I think there were before this announcement there were one positive, one negative. Positive was China stimulus and the kind of
Yeah.
expectation of demand pickup. The negative was, of course, as mentioned by Trump, President Trump, I beg your pardon, duty on aluminum and steel products, certain steel products. That he's continuing with it. And this particular news flow that has emerged this morning I don't think it was because of that that the rally was there. I think it was also because of the fact that metal sector overall, if you go to see, was an underperformer. And now we believe that domestic demand is going to pick up. Government is doing all the right things in terms of protecting the domestic metal manufacturing companies from any kind of external dumping threat. And this is not the first time, Sakshi. Even earlier in the past, government has increased import duty. Government has put in an elevated anti-dumping duty so that there is no unfair advantage to those foreign companies who would come and dump into India. And dumping was happening left, right, and center because there was a lot of issues across the globe. So this is a right step. How much, in what term, when? I think there is a little bit of more clarity that we need to have. But as a brokerage house, we've been positive on Tata Steel, JSW, JSPL, Vedanta, Hindalco, and Hindustan Zinc. But this is from a long-term point of view on the fundamental side.
Okay, so that's as far as the metal story is going. The other big news that came in and it was seeing a lot of reaction yesterday. How Bajaj is now going to be the sole owner of the insurance business. Allianz has taken an exit. They're spending quite a bit, about 25,000 odd crore rupees there. What is the sense that you're getting? And of course, LIC is also talking about how they want to take over a sole health insurance player. So the insurance space is coming back into focus. What's your stance there, sir?
Well, so Sakshi, I think there will be more, you know, possibly increasing stake or more M&A activity, acquisitions, as we've seen in the cement pack, if you recollect, Sakshi, for the last 2 years. I think insurance sector will also see some, not as similar as the cement sector, but something in line with what we've seen. So this consolidation will possibly be something that will, keep the large and strong players in the race. Small, medium-sized, weak balance sheet will possibly get merged. Uh, as in brokerage house, we've been positive on the insurance sector, but the only problem was the expected run rate in terms of new premiums and premium collection was not up to the mark. But slowly, steadily, I think the wisdom prevails upon a common Indian that you have to buy insurance for your family's sake and not for the sake of saving some small amount of tax. And that wisdom has grown to the next level in terms of getting higher sum assured. Now, when you and me get our sums assured at a higher level, our premium outgo to the insurance companies at a much higher level. That translates into higher new premium earnings for the insurance companies. So we've been positive on LIC, SBI Life. As a disclosure, Sakshi, on Monday itself, on our YouTube company YouTube channel, George Spotlight, we have given a investment idea in form of SBI Life Insurance. That's a disclosure from our side. So SBI Life, LIC, HDFC Life, and ICICI Pru Life. These are some of the life insurance companies that we are positive. In the non-life general insurance, we're positive on ICICI Lombard.
Okay, fair point. So that's as far as the insurance basket is concerned. We discuss IT, but I also want to discuss the other defensive pharma space as well. We've been seeing some smart moves of late yet again on the pharma path. What's the sense that you have here, sir? Do you have any favorites? Are you betting big on some pockets between hospitals, frontline pharma, OEM players, or are you looking at the diagnostic chains as well? What is appealing to you at this point?
No, my strong belief, I think I've mentioned this earlier also, Sakshi, that when you look at a pharma universe as an investment idea, then don't just look at pharma companies. You need to also have diagnostic companies. You also need to have healthcare, that is hospitals. And that makes a perfect universe in terms of the investment ideas. So we have a lot of companies, but I'll just name a few in all the three categories. Large cap names in pharma would be Sun Pharma, Cipla, Dr. Reddy's, and Divi's Laboratories. In diagnostics, we have only one company called Dr. Lal Path Labs. In healthcare, we are positive on three names, starting with Apollo Hospital, Narayan Rudalaya, and Fortis Healthcare. Uh, Again, pharma is a sector which is, as of now, vulnerable to what US tariffs do. But one has to realize that you cannot have the kind of capability, capacity which India has, and India is India, India was, India is, and India will remain pharmacy to the world. So in 24 hours or in 1 month or in 3 months, nobody is going to shift their manufacturing activity into US lock, stock, and barrel. And remember one thing, Sakshi, the cost of manufacturing in US is very high. Labor
Yeah.
cost is very high. Labor laws are very complex. In case if you get caught on the wrong foot, litigation fees will kill you over there. So, I think whatever policies that are being made in US in terms of tariffs, I think one needs to seriously give some kind of wisdom and fine sense of judgment to President Trump.
Fair point. Mr. Shah, is there pain still left in some pockets that still needs to be taken out in the markets?
I wish I had a crystal ball to gaze in and answer that question of yours, Sakshi. But let me say this: I think small cap, micro cap. I won't go into sector and stock specific. I'll rather look at the segment wise. So small cap and micro cap, I think there is still more pain. There are certain governance and fiscal issues with certain companies that we've been seeing over the last 2 3 days. I won't go again. I won't go into name specific. Don't be a Robin Hood and try to value buy or bottom fish into these kind of names. Stay away from lesser known names. Stay away from names which have a little bit of gray area. Try to focus on large cap. Buy quality, don't buy quantity, Sakshi. Mid cap, yes, sector specific. You can definitely look at, for example, mid cap IT, mid cap financial names, mid cap cement companies, mid cap FMCG companies. I think these are some space where you can possibly bottom fish or value buy as far as mid cap is concerned. But small and micro cap and names which have a gray area, try to stay away from that.
Okay, got that. We also have another guest now joining in. Let's welcome Mr. Rudra Murthy, research head at Vachna Investments, joining right in. Rudra, warm welcome. Long time. You have been globetrotting, I have heard. Tell us, how has your holiday been so far? And actually, you've gone away from the markets at a time when it was really, really painful for all our viewers and investors to really face. And you've come back at the right time when the markets are bouncing back.
Thank you so much for having me on your show, and always a privilege to have Sakshi as host and to give my small knowledge and experience to all our co-market participants and our viewers also. See, let me be very clear on my market analysis. I might be completely wrong, but I want to put my neck out and tell that at this point of time, market has clearly turned from sell on rise to buy on dip market. And I will tell you why, and I have a lot more to discuss both fundamentally and technically, but I'm making a very bold and a strong statement that market has already made a bottom and we have now turned from sell on rise to buy on dip market. And let me tell you, yes, being a trader and an investor, what happens is more the time you are on the screen, more will be your temptation to do something. And last 6 months, starting from October 3rd, where the Iran-Israel issue started and from where market started tanking for different reasons, from October 3rd till today, continuously we have seen already a good fall in market for last 6 months, and I am feeling that markets right now are in a fantastic positions to buy, and you have to be very sector specific, stock specific. All the short sellers, the time is already done, and I was avoiding lot of screen time in last 6 months where I was not comfortable with market, and now it is time to completely get back to market and be very sector specific and stock specific. Private banks will make a big move from now on to next 1 year. Metals will do very good for me, and for me specialty chemicals and then discretionary consumer area and lot more space, like in fact hotel and hospitality. You have lot of stocks in these region, but let me tell you, this is still not the time to adventure into mid and small cap in general. Stay with large cap. Yesterday FII have started buying, and now we are not even looking at what is happening in US market. We are doing all alone, and this market from now on will definitely give mouth-watering stocks at mouth-watering level to buy, and a lot of money and wealth to be created from here on. Time to be fully on the screen.
Time to be fully on the screen, and the markets have started 22,853 on the Nifty. You can see a flattish with a positive bias kind of an opening. The Nifty Bank also about 118 points higher, 49,424. There's a 0.2% of an uptick right now. Even when we look at the Sensex flat with a positive bias, you also have the mid caps opening higher in trade. The Nifty Mid Cap 100 index is also opening in the positive zone as we speak, about a 0.7% of an uptick that can be seen on that one. The advances on the NSE are 1364 to declines which are upwards of 300. So again, we have a strong advance decline ratio, skewed towards the advances at this point in time. Let's also look at some of the other pockets that are buzzing in trade. Let's look at the heavyweight counters first. Banks, because Rudra just said that private banks are something that he's looking at. ICICI Bank, HDFC. Let's see how those are moving forward in trade today. A 0.5% uptick for HDFC, 1741 in a comfortable zone. We also have ICICI, which is flat with a negative bias. All the sectors seem to be giving us some positive zone. You can see PSU banks, autos, realty, oil and gas. You can also see financials that are up and about. Metals shining bright, 1.4% higher. So continuing with the move from yesterday, metals is clearly something that we need to watch out for. 9150 for the middle index. Let's look at a whole host of names there. In fact, Tata Steel, JSW Steel, SAIL. Let's pick up all of these counters to see how these are moving forward. This space needs to be watched out for with that 12% safeguard duty now being proposed. There is an uptick across the board as far as the metal counters go. And you can see 2.5% uptick on Tata Steel as well. The recommendation on safeguard duty is definitely pulling up the sentiments across the board on the metal pack today. We also have a lot of news flow stocks. So let's pick up some of those stocks to see how they are moving. Bajaj Auto. Remember, there's been an approval for 1,500 crore rupees fund infusion for BACL. And there's been a reappointment of Rajiv Bajaj for the next 5 years at the helm of the company. So that's also pulling up the stock higher, 0.4% up. Nazara Tech, the company has acquired 8.9% shares of Absolute Sports. That's in focus today. Juniper Hotels, again, it's executed a share purchase agreement for Genepro Hotel acquisition, and that's going to be in focus. We also have stocks like Zydus Life. There's an US FDA approval for one of the drugs that they have got. Again, something that is moving the stock higher today. NTPC, it's going to be issuing 4,000 crores of debentures at 7.2%. That stock will also be in focus, about 0.9% higher. We'll also look at L&T. Here, the board has approved debt issue for fundraising. That's going to be important to watch out for too. So those are some of the stocks that are actually, in focus today. Let's get back to our conversation with both Rudra and Mr. Shah. Mr. Shah, if I have to ask you, Rudra made this one point that's still not a very comfortable zone to be in the mid and the small caps, and one should really look at the large caps. What's the sense that you have, and what are you advising clients at this point in time on both large versus the mid and small caps?
Like I mentioned just a while back, mid cap sector specific is something that you should look at. Small and micro is something definitely an avoid. We are going to be witnessing fourth quarter earnings, the last one this financial year. If any disappointment in the small and mid cap in terms of what the stock prices are and what the earnings deliver, then I think there could be further sell off in these small and micro cap. Mid cap, like I mentioned, I also mentioned about sectors where you should look at mid cap. So we like financials in mid cap, we like mid cap IT, we like mid cap cement stocks. Mid cap FMCG, mid cap auto related stocks are something that you should possibly look at. But again, having said that, I have always believed that large cap is where you create value from 3-year, 5-year plus kind of time horizon. And as far as I have seen it and experienced it, if you stick to the basics, don't try to be a Robin Hood. Market is always going to be rewarding you. So it is up to you where you want to be, but large cap is the preferred. And then, of course, select sector specific mid caps.
Okay, got that. Yesterday we did see a lot of flyaway moves as well across the board. Many stocks came back in a strong sense. Stocks like Zomato, for instance, One Mobi Quick Systems, PB Fintech, Paytm, for instance. I mean, 6, 7, 8%, double-digit gains being seen across the board as well. What do you make of such strong moves coming back, Mr. Shah? And do you think this is going to be the cause going forward? They have corrected quite a bit. Is this the time to relook at some of these new age tech names?
This is for me, Sakshi.
Yes, yes, Gaurang, it's for you.
Yeah, okay. So we have been positive on PB Fintech, Paytm. Zomato is also one of those companies in the
Yeah.
fintech, if you can consider that. Nike is the other one that we've been positive. And my sense is that after initial bouts of competition in the entire, new tech or fintech related competition, we already know, e-commerce or quick commerce is going to witness a huge competition as we go forward from here, be it the Amazons and the Zaptos already there. Zaptos plan to come out with an IPO this calendar year.
Yeah.
But we believe that strong companies with visible business strategy will survive. I mean, again, I will again repeat what I said. Be very careful as to which companies you invest in as far as fintech companies are concerned.
Okay. Rudra, I'll take that point with you as well. Zomato, something that we were seeing hovering around 200, 201 odd levels a few days ago. It's bounced back smartly. Do you think, things are turning back in favor for Zomato? Should one really go big on it? Those who were looking for an opportunity to buy Zomato at lower levels, is this the right time?
Sakshi, I'll be very clear on my view and I might go wrong, but then I will still look into sectors and stocks where I have valuation comfort, number one. And I will also be in those sectors and stocks where growth is more important, value is more important than momentum. Because at current market environment, I don't want to look into momentum. Rather, I want to look into growth as well as where I have margin of safety and value. I will not put fintech as a sector which comes there. But however, if you force me to buy stocks out of this sector only, definitely my top two stocks will be one, Zomato, and two, Paytm. Paytm not at the IPO price of 2000 plus, but Paytm at current level. So for me, I was making joke on Paytm and Zomato earlier where valuation was absurd, and I was telling rather than buying Zomato, please buy Tomato. And I said if you buy Paytm, you have to pay M2M regularly. But today, the price of Paytm is not at 2000 plus, but at around 700, 750. It's a mouth-watering buy for me. And Zomato at current levels, definitely it is a good buy. Might be a 20, 30 rupee kind of a correction, closer to 180 will be much better. But still I will buy at 220 Zomato, and on dips to 180, I will be buying Zomato to my portfolio. But then for me, this is not the preferred sector. But if you ask me and force me to buy stocks only from this sector, I will only go into two stocks. That will be Paytm number one and two will be Zomato at current market price.
Okay, got that. So that's the new age tech space that we are looking at. Gaurang, how about Ola Electric? Yesterday we again saw a very smart move here, but there have been concerns that have been mounting on, vendors wanting to take the company to insolvency. What is the sense that you have on Ola Electric as of now?
I'm sorry, Sakshi, is this for me?
Yes, Gaurang, for you.
So we don't have a standalone recommendation right now, so I won't go ahead and give a buy sell on that. But it's been a real pathetic picture as far as the entire process of pre-IPO, then IPO, then listing, and the performance after that. You recollect very well discussing Ola Electric along with you and my good friend Shell. Even post listing and after that, people forgot there is a 1,500 crore loss on the balance sheet even when the IPO got listed. I guess that would have got elevated as we speak right now. Then there was a big issue in terms of customer, dissatisfaction. 10,000 plus complaints with the consumer court. Then there was some governance and disclosure related issues. Then you had the announcement in terms of that gigafactory. Then you had some technically related issues as far as the service centers are concerned. And now, of course, this insolvency issue. Uh, Look, I think instead of just speaking on social media and media, the management should sincerely put in efforts to get rid of the problems that they have on the balance sheet, and before that get rid of the customer related problems. Remember, how much ever you advertise in whichever media you want, your customer is the best source of advertisement for you as far as your products are concerned. And if your customer is not satisfied, he's going to take your product down the drain. So, I still believe that if you want to look at EV related play, then other than Ola Electric, you have established players like, all the other two-wheeler companies are having, like Bajaj is having, Hero MotoCorp is having, TVS is having. If you want to play a pure electric play, then I think Electra Green Tech, why not? I would again use that phrase that I used earlier. Don't try
Yeah.
to do any kind of value buying or bottom fishing in Ola Electric. I think this management needs to really introspect as to what they want to do.
Okay, got that. So that's as far as Ola Electric is concerned. But taking that point forward, Gaurang, in the auto pack, where do you find opportunities at the current levels? Gaurang, on the entire auto space, I wanted to ask you.
Sorry.
Where
I beg
exactly?
your pardon. I beg your pardon. I beg your pardon. So, two-wheeler space, you have all the three big names, Bajaj, TVS, Hero MotoCorp. Uh, Four-wheeler space, again, three big names, M&M, Tata Motor, and Maruti. Ashok Leyland is a pure commercial play. Uh, Agri-related play, if you want, then Escort, agri-related and earth-moving equipments, then Escorts Kubota. And I mentioned Electra Green Tech as a pure EV play. My sense is, Sakshi, that the scare from Tesla, वो हिंदी में एक कहावत होती है ना साक्षी, शेर आया, लेकिन वो
हाँ.
शेर आया ही नहीं फिर, तो फिर डर किस बात का था? That's the sad story, Sakshi. So, any kind of fear, external, hyped up fear, I think these are great opportunities to nibble into relatively competitive stocks listed out of India.
Okay, got that. Well, on that note, thank you so much, Mr. Shah, for being with us on the show and helping us out with all your insights on various sectors and the overall market as well. Always a pleasure to speak to you. Hope to see you very, very soon, yet again on another edition of Business Today. Thank you.
Thank you, Sakshi. All the best. Thank you so much. Bye-bye.
Thank you. We'll continue our conversation with Rudra now. Rudra, we were discussing this entire auto space, and I thought that I'll take your view as well on Ola Electric. There's been too much to talk about. On the one hand, the company is going on launching various models in various spaces. They continue to retain their market share, but the balance sheet, like Gaurang pointed out, is really not supportive. The kind of issues they're facing with customers, with safety, with now insolvency kind of issues that are being raised by some of the vendors. How do you think retail investors who are stuck at the IPO price should read this?
Sakshi, I'll be crystal clear with my views and nothing to offend on any particular company or stock. I don't want to even talk about these kinds of stock. Why do you want to make money out of these stocks which will not create wealth for you? And I know this stock at 150 rupees when everyone were shouting to buy. I know it at 100 where people thought it is deep value. And I know now at 50 rupees they are saying it is much more deeper value. I will definitely avoid these kinds of stocks with lot of news flows which are negative, and we have 6,000 plus stocks listed in NSE BSE, and why do you want to fight out of these stocks? So I will say it is a clear avoid for me. And you want to buy something from let us say the space of automobile or into the new fintech kind of a stuff. I said already on new fintech it is only Zomato, Paytm if you force me to buy, but still that sector for me valuation comfort is still not yet there. But if you force me, I will only pick those two stocks. And when it comes to pure automobile play, why do you want to buy this Ola Electric when you have stocks like, let us say, Maruti, stocks like, let us say, even Tata Motor after a 40-50% kind of a correction? For me, Tata Motor will still be a better buy at current price. I know at 1,100, 1,150, I will avoid Tata Motor. But at 680 rupees, how much more down can it go? And most important, as you also told Sakshi in the show, that only yesterday FIIs have turned positive, and they will first buy into large cap. They will not buy first Ola Electric. They will buy stocks like Maruti. They will buy stocks like Tata Motor, or they will buy first into private banks where we have more valuation comfort and visibility. We have Reserve Bank of India completely supporting liquidity and doing everything possible for markets to move up. So why do I have to go into these sectors or these stocks when I have valuation comfort in private bank? And people ask me, Rudra, name for me not the 3 stock but 30 stock. I kept on telling the same name, ICICI Bank 30 times. And you want other stocks? Okay. Go for Kotak Bank, go for HDFC Bank. I know the pain of people who have bought HDFC Bank last 3 year, 5 year, and the price remains at the same level. But I am not recommending HDFC Bank 3 year back. I am telling today's price. Reliance also, when it was at 700 rupee, people kept on telling, why do I have to buy Reliance at 700? Because last 5 years I have seen pain. But from 700 stock went to 2500 in no time. Now the question is HDFC Bank, I'm not talking 3 year, 5 year back, I'm talking today. So please understand that yes, private banks have valuation comfort, metals have valuation comfort, NBFCs have valuation comfort. Let me buy into these ones. Don't go into mid and small cap in general. If you ask me, Rudra, still are you buying mid and small cap into your investment portfolio? Are you recommending that to client? Yes, but I do 24/7 research. I understand valuation, and I have a different time period than a retail client watching the show. So for our retail client watching the show, stay with large cap. I will give you names, Sakshi, make note. And sector wise, I'm saying come to private bank. Look at 3 stocks in private bank in the same order of preference. Number 1, ICICI Bank. Number 2, Kotak Bank. Number 3, HDFC Bank. You want 30 stocks? Repeat the same 3 stocks 10 times. It is not the number of stocks which is important. Making money is important for me in market. Market does not even respect whether I am a chartered accountant, whether I have 23 years of experience in stock market, all that. The only thing which can make you more humble is market. How much ever learned you are, market still has something more than what I might know in market. So for me, very clear, number 1 sector, private bank, 3 stocks to buy in the same order, ICICI, Kotak Bank, HDFC Bank. Number 2 sector to buy will be NBFC. Yes, in NBFC, I'll give you 4 stocks to buy. Number 1 will be for me Bajaj Finance, Bajaj Finance, Bajaj Finance. And yes, every dip is a buying opportunity in this stock. Then look at Shriram Finance, very, very strong. Also look at 2 more stocks in this. That is L&T Finance, also very, very strong to me. And look at even Chola Finance. So for me, Bajaj Finance, Chola Finance, Shriram Finance, L&T Finance, these are stocks in NBFC which has long way to go. I know some people will only see last 2 days of
Muthoot Finance, Rudra. How about Muthoot Finance looking at gold rally?
Okay, so very good, Sakshi. If I have to pick a stock with a gold specific move and you want to buy them, yes, for me both Manappuram and Muthoot Finance looks good. Might be for very short term. There is also news floating around now for a long time that Bain Capital will take some stake with Manappuram, and that is keeping the stock very positive. So might be once this news comes out to market, yes, Manappuram might top out there and then start falling down. But then yes, at current level, if you want to play for that news of Bain Capital getting into the stake with Manappuram, yes, that will take the stock might be 5-10% higher from here, or even Muthoot Finance if you are bullish on gold. The point to me is gold has gone up 40% in last 2 years. You would have made hell lot of money investing in gold if you would have done 2 years back. But my simple question to you will be, today I will buy gold seeing the 40% move in last 2 years. Will I make another 40% in next 2 years from the higher base what it is today? That is after the 40% move. And my clear answer will be no. So I will not see a 40% kind of a move from here on in gold. So what is important is identify those asset classes which have not performed to you as an investor and which can do very good, where you have more tailwinds rather than headwind, and where the macroeconomic news and sector specific news are turning positive. I'm not saying I'm turning bearish on gold. I'm only trying to tell you If an asset class has moved already 40% in last 2 years, can you expect another 40% move from here on in next 2 years? My answer is no. So I will be buying banks. I will be buying NBFCs, and I've given you 4 names in NBFC, 3 names in private bank. I will still avoid PSU bank. And if you force me to buy a PSU bank, then I will be going into SBI. But other than SBI, no other PSU bank. And I'm very clear, only on private banks, I'm very, very bullish. And specifically on public sector bank, only one bank, SBI. And in NBFC, I have given you the names Bajaj Finance, Shriram Finance, Chola Finance, as well as L&T Finance. Now, the third sector after bank and NBFC will be metals. And in metals,
Yes,
I'm
in
very
fact, Rudra rightly pointed out, metals is something that I wanted to ask you because of this steel safeguard duty recommendation that has come in overnight by DGTR, something that we were discussing with Gaurang as well. What is the impact of that? Do you see this 12% duty that's being proposed? Now, something was already being anticipated, it was in the works. I want to know first the impact of the global cues, Chinese economy coming back, stimulus over there, that as a trigger for metals, and domestically the safeguard duty. I also want you to help us understand the impact of this measure on steel and metal space vis-a-vis the impact of this on the auto space, because there is this fear that this step is going to be detrimental for the auto space. Please help us understand how this step is going to be taken forward for both metals and autos.
Sakshi, such a big question, I will answer it in 2 lines. Number 1, stock prices always discount information way in advance. And let me be very clear and categorical in my statement. People who only search for why will never make money in market. Let me quote Rakesh Junjunwala here. He says, if economists had all the information and knowledge of economics, they would have been the richest people in the market. And reality is they are not. And similarly, Warren Buffett made another statement where he says, if books are the biggest assets of this world, then librarians would have been the richest people. No doubt books are important, but implementation is even more important. What is the use of having all the books but not reading and implementing it? Similarly, economics is important, but what is the use of not understanding how that will impact market? So what I'm telling you is already there has been a move in market, especially on metals, having all these anticipation much earlier. And now you see today's prices on all the metal counter. Look at JSW Steel. Today it opened at 1040, 1045, and now it is just small profit booking is there by those guys who bought before the input or before the information or the news. So what I want to tell you is, overall, keep aside this news, metals will be the third important sector which I will prefer. And yes, the news is already out now. Buying because of the 12% duty part, it doesn't make any sense. But still buy not for this particular news, but for metals in general. For me, in metals, the stocks to buy will be Vedanta. So Vedanta at 460, 450 is a steel. I see from here on Vedanta going to 600, 650 within a year's time, which is a 40-50% kind of an appreciation on Vedanta. For me, after Vedanta, Hindalco also looks very strong. Jindal Steel looks very strong. So 3 stocks from metals which I'm very bullish will be Vedanta, Hindalco, and then Jindal Steel.
Okay, God, that's as far as the metal pack is concerned. The other story that I wanted to discuss, Rudra, with you is the IT space. What do you think is the key pain that IT is facing of late? Just a few months back, we were hoping to see a turnaround in IT, betting big on the IT space, large caps, mid caps. But suddenly there is this talk about whether US will turn into a slowdown or a recession, the policies changes there, and how that could be detrimental for the growth, and the growth that was being anticipated in FY26 for IT may not turn out to be so. Nifty IT is already in the bear market. There is a question about whether valuations are still expensive. Brokerage house Citi has said there are many headwinds that the IT sector is facing as of now. What would your approach be to the large IT space?
Sakshi, very difficult to see the market live, put trades, focus on Sakshi's big question and also on the answer. Now, let me be very clear. IT is the first #1 sector in my avoid list. How I have banks, private banks as my #1 sector on the buy list, on the avoid list, or on the, I'll not use the word sell list because I've already turned very positive on market, but on the avoid list, #1 sector will be IT. And if you ask me why, let me answer the why. Two people in this world whom you cannot predict at all. Rakesh told it is one, weather, two, wife, and then three, market. So he said weather, wife, and market cannot be predicted. We have to only adjust with them. But I am now making a change in the statement. Two people whom you cannot predict in this world is one, Donald Trump, two will be Putin. So when I cannot predict these two people, predicting IT will be as tough as that. So I am avoiding this sector because what these two gentlemen does, no one understands, including themselves also. So keeping that in mind, IT is a big avoid, and hope I've answered the question crystal clear.
Absolutely. But let's see what else is happening in the markets. Absolutely flat with the positive bias trade on the Nifty. IT, like I said, is 1.9% lower. So that's the pain point. And Rudra clearly says an avoid on this sector. Metals is in his buy list. The sector is up by 1.3%. Banks is in his buy list, and the Nifty bank is up by 0.5% as well. We have discussed the auto space too. One more sector that I wanted to discuss, Rudra, is the consumer durable space. Why am I asking about this and the large consumption theme? If you can put any stocks onto that basket, we are approaching 1st of April, the new fiscal year, when finally the budget announcements will finally take shape and get implemented. We had this huge tax bonanza that we were cheering about when on 1st of February, Finance Minister had announced those tax cuts, thinking that that will finally start running the engine on consumption faster. Now, I want to know from starting 1st April, are we going to see already some signs emerging in the consumption basket? Should one really bet big on the consumption space?
100% yes, Sakshi, but I will put consumer durables with very specific stocks. And for me, this is not a sector-wise buy, but it is a stock-wise buy in this particular sector. So when I said #1 sector is bank and I told the names, then I told NBFC, I told the names, then I told metals, I told the names. So for me, after these three sector, fourth one will surely be consumer discretionary. And here you have to be very stock specific. I'll give you names. Indigo will be the stock which you should buy and forget. Don't even see the price, buy it at any price. Today I don't know where Indigo is, might be at around 4,800. You buy it at 5,000, you buy it at 6,000, you buy it at 4,000 also. Don't see the price. This is a stock to have in your portfolio and forget it. You will make good money, and Indigo as a company is doing great. Only thing which I have as one caveat in Indigo is promoter sale or promoter stake sale. And if that comes, stock will trade at a 5% kind of a discount to current market price and buy the dip left, right, and center. So except that, the hangover of promoter stake sale, there is nothing else which can stop Indigo. Even if that promoter stake sale comes and stock comes down 5% on that news, that's the time to buy left, right, and center. So for me, Indigo is a definite buy. Don't wait for that news. At least have some quantity right now and buy if you get that news. After that, Indian hotel, the way people traveled for Prayagraj and the way they stayed and the money made, Indigo flights were all at an average at 30,000 rupee, 40,000 rupee one side. In fact, there were comments like going to Bangkok is much cheaper than going to Prayagraj, but both the objective is different. Yes, one is for entertainment and one is for spirituality, but then you can go twice to Bangkok and come back than going to Prayagraj, but I am not interested neither in Bangkok, but for sure in Prayagraj. For me, what is important is see the prices of flight and the way people travel. Go to any airport, you will see now bus stops are much less crowded than airports. And tell me a second name after Indigo today. Indigo is the only name you have there. No doubt you have SpiceJet, you have something from even the Tata's group and the whatever you have, even Air India there, all that stuff. But then Indigo is the only name I have here and you have to buy that. For me, the only stock which I can tell buy and forget will be Indigo, 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 Indigo. Then The second one from the same sector will be Indian hotel. So for me, last 2 quarter results have been fabulous for Indian hotel. Yes, if you can buy this stock closer to that level of around 700 rupee, it will be much better. But even at 800, you buy, and on dips to 750, 700, if you get by chance, if you are lucky, then add into Indian hotel. So I'll be very stock specific. So people will spend money into tour and travel. People will spend money into entertainment, hospitality, all that area. So yes, pick up stocks like Indigo, pick up stocks like Indian hotel, or if you want to even go for ITC hotel, or you want to go for some other hotel stocks also, fine. And
What
if you
about
want to go
lemon
for
tea?
tour and
Lemon
travel,
tea?
it will be Indigo.
Lemon tea, how would you really look at it? Macquarie today has given a 56% upside target. How would you look at
So
lemon
for
tea?
me, all these are option number 2, option number 3 from the same sector. But my top pick will be Indigo and top pick will be Indian hotel. But if you want 3 stocks in tour and travel and 3 stocks in hotel, so I will say 3 hotel stocks will be Indian hotel, Indian hotel, Indian hotel, and 3 stocks from travel will be Indigo, Indigo, Indigo.
Fantastic. Okay, so we really appreciate your clear-cut views when it comes to stocks, Rudra, and that's what the viewers really appreciate you for as well. There are no two ways about it. The way you really talk about stocks without mincing any words, and that really helps them identify the right strategies and the stocks that they are in, wherever they are going wrong or right, you clearly help them understand that. Coming back to one more space, in the PSU space, what is your sense on the erstwhile favorites, defense and railways? Why am I asking this is you did give us your avoid list starting with IT, and I want to still know how are these two placed between your buy and the advice against kind of a list at this point in time, PSUs, railways and defense.
Sakshi, it is so important that shows success doesn't come only from the person who comes there as your host and gives you the views on market. It majorly comes also because of our viewers and also because of great anchor like you who will ask those beautiful questions and get what the viewers want. When you give me credit in terms of saying like a lot of the viewers appreciate Rudra for his clear-cut views and all, I can only give you one answer to this. Nothing is in Rudra hand. Everything is because of God's grace. I always say, if anyone wants to make money in market, you need all the 3 things. Not any one of these 3, but all the 3 things. Number 1, mehnat. You have to do your hard work. Whether you meet companies, you analyze data, you see charts, you do research, you have to do hard work in any field. So too also in market. Mehnat chahiye. Second, integrity, niyat. So what is integrity? What is niyat? Very difficult. You have to just practice, never preach them. So for me, along with mehnat, niyat is required. And after these 2, the third thing what is required is God's grace. वो भगवान का कृपा चाहिए. ये तीनों है तो ही मार्केट में पैसा बन सकता है, and you can make success in any field for that matter. So thanks for asking so beautiful questions, and any credit to Rudra should only go for God's grace. And let me now be very, very clear and answering your specific question. Second avoid list for me will be PSUs. I still remember your co-anchor Shailendra, and when he was asking me questions on railway stocks, defense stocks and shipping stock, I was clearly telling these stocks have gone up 5 times, 10 times in no time. And I said valuations are absurd. And I said these public sector undertakings are valued even higher than private banks and private sector undertaking. How can you value a PSU the way you value a private bank or the way you value a private sector? Private sector has a different management. It has no kind of whatever you see in terms of public sector undertakings where you have government interference, where you have politics in between. So whenever you have problems like Yes Bank, you need only SBI to save. You can't tell HDFC Bank or ICICI Bank, please save Yes Bank and I want you to buy the share at 10 rupee. You can't order that to HDFC Bank or ICICI Bank. You can only tell that to State Bank of India, and the government can only do it through this way. And also very good, before I forget also, don't forget to ask a question on Indus India Bank. I'll come to that later. But then getting back, public sector undertaking is in my second avoid list after IT, because I don't understand Donald Trump. I will say no to IT. And second avoid will be public sector undertaking. It is easy to tell today, but 6 months back also, every time when I am in the show, and Shailesh was always fighting with me. So you don't understand the way these stocks have given wealth and returns in last 1 year, 2 year. Undoubtedly, they were great stocks at that point of time, not after a 5-bagger where valuation comfort is not there. Look at PSUs and the way they have been beaten down left, right and center. This is Modi 3, not Modi 1. And Modi 1, Modi 2 was different. Modi 3 has to listen to Chandrababu Naidu and Nitesh. And Modi cannot do the way he was doing it in Modi 1 and Modi 2. So public sector cannot do the way it was doing before. And prices are not now cheap, or valuation comfort is not there. And then you have seen already a 40% kind of an average correction in public sector undertaking stock. All that railway, all that defense story, shipping, all that have got beaten down. I will still avoid these stocks even at current level. I don't see mouth-watering valuation. They have now come back to fair price from those absurd valuation where they were. So for me, second list of avoid will definitely be PSU. Sakshi, you are on mute, unable to hear you.
I'm saying second list of avoid continues to be in the PSU space from Rudra right after IT. But the clear quote that Rudra has given all our viewers today, in case you really want to make money in the markets, there are 3 things that are required: mehnat, niyat and God's grace. And only then can you continue to make money in the stock
market. And all 3 is required, Sakshi, not any one. Bhagwan ka krupa. Let us make it in Hindi only. Mehnat, niyat, Bhagwan ka krupa. All 3 are required. It is not or, it is and.
Absolutely. Many thanks, Rudra, for being with us on the morning show. It was a pleasure to have you back, and I'm sure all our viewers are appreciating your presence back again. We will continue to get you back on many other shows also, so that a lot of our viewers can benefit from your clear-cut ideas and advice that you share, on stock markets. 22,876. Thank you so much, Rudra. 0.2% higher in trade. We are inching back above. So 22,876 now coming in for us. Let's hope that this continues for the better. Even though it's the broader markets that are definitely doing much better in the trades today. Among the sectors, when we look today, you will find a whole host of moves across mid and small caps. Look at the mid caps, 1.4% higher. Strong move can be seen there. Even the small caps are up by about a percent higher as well. All the sectors, barring say the IT and the FMCG pack, are up and about. Banks up, autos up. You have IT. You have metals, pharma, PSU banks also doing well. At this point in time, real estate, healthcare, consumer durables, it's panning out to be again another day of positive trade. Let's hope that continues for the better, and we'll catch you around on another edition of Market Today. But viewers, in case you have questions on the markets as to how should you be really looking at the stocks in your portfolio, or fresh stocks that you should be buying at this point, well, ask those questions on daily calls. 12 noon, I'll be back with another set of top market experts to guide you through your stock-specific queries. Many thanks for joining in.
अरे भाई, ऑफिस में काम का प्रेशर, काम जल्दी खत्म कर, फिर थोड़ी मस्ती करते हैं. Okay, this isn't a sympathetic text by a friend of mine, but rather a reply by Grok AI. And AI is telling me to finish work ASAP so that